let's do some more analysis on the capital market developments. And the Securities and Exchange Commission, SEC, has announced for the information of the general public that a number of fund management companies have had their licenses revoked. The Commission says this move is in line with the Securities Industry Act. It is also advising the general public the companies are not mandated to carry out any fund management activities. The Commission wishes to inform the general public that anyone who engages in any transaction with any of these companies or their representatives in their capacity as fund managers could be exposing themselves to avoidable risks. Joining us in the studio to shed more light on recent happenings in the capital markets is Joy business researcher Philip Namfuri. As usual, Philip, welcome to the marketplace.
Thank you.
So why the need for this, or what exactly does it mean?
Okay, so the SEC is saying that pursuant to the Securities Industry Act 2016, Act 921, particularly Section 122, it has the powers to revoke the licenses of companies. So 5 companies, and I'll read the list out to you. First one, Georgetown Capital Partners Limited. Second one, Equity Capital Limited. Third one, Index Analytics Limited. The fourth, DM Capital Limited. And the fifth, Oxygen Advisory Limited. Their licenses have been revoked as we displayed here, and if you do business with these companies, you do so at your own risk. So the SEC is saying that stay clear of these companies because they no longer have the mandate to carry out fund management activities. The key question here is that if you look at the notices of the SEC, there are no reasons ascribed to why these 5 companies have had the licenses revoked. And I'm sure in the coming days, we should see answers as to why these 5 have had the licenses revoked.
So in the meantime, what will happen to investors who have already started doing business at this juncture that the directive has come to play? What's going to happen to their funds?
So these are the questions, these are the answers that we should have seen in this statement or this notice from the SEC. However, they haven't said anything. All they said is that these 5 are no longer mandated to undertake fund management activities. Now, it takes me to last 2 weeks when we had this discussion right here on the marketplace about the color coding of the SEC, where they have red rows for companies that have no major regulatory issues, and then red rows for those that have major regulatory issues, and gold rows for those that don't have major regulatory issues. So if you go to the SEC's website, sec.gov.gh, you click on licensees, you click on fund managers, you see that there are about 128 companies, and each has been categorized. So if there's a gold row, you see that they have no major regulatory issues. Red row, major regulatory issues, pending complaints, and one of them is voluntarily ceasing operations in the country. So that's independent of these 5 that we have here that have had their licenses revoked by the SEC.
And can you give us a hint of some of these companies under red?
Okay, I wouldn't want to name them so that it doesn't spread fear and panic. But if you go to the website, and it's important to add that the website is updated regularly. So as and when any company fixes its problems, maybe a complaint, then the SEC takes you off the red row into the gold. So with the gold, you have no major regulatory issues. With the red, you have major regulatory issues, complaints. At the same time, the SEC is saying that these companies that they've put in red and gold, this color coding, it does not mean that these companies are not safe to invest with, or they are safe to invest with. It's more or less like an update. So if you have an institution, let's say for example a bank, and then the regulator has fined the bank because of a customer complaint or something, it doesn't mean that bank is not safe to deposit with. It's the same argument the SEC is advancing here, that these companies, gold rows, red rows.
But then you give an indication to the public that if a company is in under red mode, I mean, then you should have.
It's just more or less like an update. So if you look at it, gold rows, we have 79 companies that have the gold color, and then 49 that have the red rows. The gold rows, as I said, fund managers with no major regulatory issues. Red rows, fund managers with major regulatory issues, pending complaints, and then suspension, etc. So SEC is just saying that it's more or less like an update. You can do business with them according to the SEC, but know that this is the state. So they have maybe they were supposed to file some returns and they didn't file with the SEC. That will come under the regulatory issues. Pending complaints, you couldn't access your funds, you were treated poorly. SEC has captured it. So it doesn't mean that they're not safe to invest with. As and when a company becomes unsafe to invest with, the SEC says they'll let us know through their circulars, their notices, their directives, etc.
I believe that will be very, very important at this stage, so to prevent any misconceptions here and there. But what's the I mean, the future of the industry looking like?
Okay, so now it seems we're having some sort of reforms. It started in 2017. SEC brought a number of directives, corporate governance guidelines, and then investment guidelines. But now with this, you can see the sort of fear and panic. And they should come out more with information, particularly on the reasons why these 5 companies had licenses revoked, so that it doesn't spread any doubts in people's mind as to why exactly these 5 and the current state. So I would say for now we are okay, but we need more information, as they say, further and better particulars.
Do you foresee the industry going the way of the banking sector?
Oh, it's likely. Once there are corrections to be made, some companies may come out, as we've seen with these 5. Some may stay good. So it's up to the SEC to manage this information and put the confidence in us that nothing is going on, because after the banking ripple effects, we don't want the same for the capital markets. Yeah.
Many thanks for that update. Philip Namfuri is a Joy Business Researcher, in-house analyst, bringing us up to speed with some development on the capital markets.